And welcome to a VSA Capital video blog with myself, Andrew Monk, Chief Executive of VSA Capital, and also delighted today to have Brett Boynton, the Chief Executive of Tectonic Gold. Hi, Brett. How are you doing? How's it going down in Sydney with the latest lockdowns, whatever you've got?
Well, summer's finally arrived, so that's great. We've got over 30 degrees Celsius, and the forecast is for a fantastic Christmas day. So everybody's very happy. Yes, we've had a lot of back and forth. People don't really understand that in Australia, the COVID response is largely being dictated by state government. So whilst New South Wales, where head office is and where I live, is pretty open and travels pretty easy, getting across the border into another state is sometimes tricky. And so you've got this ridiculous situation where Australian citizens are being prevented from going home by kind of these notional state borders, which have never had any impact before, except for sporting fixtures, Queensland versus New South Wales in the cricket, and now suddenly it's Queensland versus New South Wales in the COVID. So,
yeah, and that's obviously caused you a few issues, hasn't it? Because you're up in Queensland, you've had some, the whole drilling program has taken a little bit longer than you'd have hoped, hasn't it?
Yeah, so getting people and equipment in and out slowed us down. The other thing that slowed us down or caused us to kind of pull out of the field program early was an early onset of the monsoonal season. So we've battled with a couple of things, some political and some kind of weather related. In fact, we tried to get back into the ground in the last week and went and had a look. A lot of trees down. We're going to need to get a dozer in there, chainsaws, clear some roads, and we're going to have more storms coming through. So we're not going to do that. We're just going to stay back, and very frustrating. We had hoped to finish our last drill hole, but we'll have to just wait for the weather to clear, and we'll get in there in the new year.
And this last drill hole, is this the last piece of what I describe as a giant jigsaw puzzle to identify this sort of huge resource that you're going after?
It's certainly not the last piece. I think that the jigsaw goes on for a while. Every time we go back into the field, we find an extension. The guys get time to walk more of the ground, and we were there with a potential Farmin partner in the last round of drilling, and they wanted to go and look over the next hill, kind of thing, and found some more copper and some more gold of interest and anomalous mineralization at surface. So we do have a very, very big target we're going after. And really the gist of it is that a tiny company like Tectonic probably doesn't have the right to go after something this size, except that we've got this technology approach which has enabled us to unlock it. So we are sequentially moving through from the kind of northeast where the original mineralization was around Specimen Hill on the main nodes, and we've been moving down this mineralized corridor and just kind of peeling away layer after layer of the onion. So successful results from a technical perspective, definitely, but certainly there is always more to do, and that is exactly why we're now looking for a larger partner to come in and help with that, increase the budget for the exploration and take it into that resource delineation phase.
Let's come on to the partner in a second, maybe. But first of all, I mean, as you say, you're using new technology, and that means that we're not seeing quite the same sort of perhaps news flow as other companies where they come out and do all these assay results where they've done this amount with this grade or whatever. How does your technology demonstrate just what sort of an asset you have? And just, I mean, how big is this asset?
Okay, well, if we put it in context, we always look at what's happened at Newcrest's flagship operation at Cadia, and that's the kind of thing we're trying to replicate, where you've got a large system with a proliferation of mineralization. So you've got multiple ore zones, and you have one central plant being fed by multiple ore zones, and that's where you get your massive scale efficiency. So although Cadia isn't the highest grade, because it has scale and it has these other credits with the copper and the minerals alongside the gold, it is perennially one of the lowest cost operators in terms of lowest cost per ounce produced. So that's the scale of what we're looking at. We're looking at a system that is running many kilometers in length, and we're seeing multiple ore zones starting to emerge out of that. So from the original sort of old workings area where we had historic mining at that northeastern end of the trend, that is the main lodes. We've now mapped out 5 kilometers of this mineralized belt, and once we can get back into the field and do some additional mapping, we will continue to add to that. The trend continues and it's open in both directions. So we're certainly seeing something of massive scale. In terms of the technology approach we've taken, clearly you can't just go and start drilling. It's too expensive to go after something of that size. So we've used a lot of initially quick turnaround geochemistry. So we get in, test the soils at and near surface. We dig down to about 1 meter and test just to make sure that we're getting true representation of what's in the ground. Then we start to build out this mosaic of information. We go back and we use the geophysics. So we're looking at what's happening down to 500, 600, 700 meters underground, and we're looking for that structure. The mineralization we see at surface, where's it come from? If we can identify the structure that has fed that mineralization, then we start to vector in, and we can use a range of different techniques as kind of pathfinders to get back to that heat source, which is where we're looking for that major gold mineralization. What we found at the Specimen Hill Suite is it isn't just one source of mineralization. We've actually got multiple sources of mineralization. So that's what is giving us the scale, these multiple potential ore zones. So it's quite a complex target to go after. So it takes a lot of time, iteration. You go out in the field, test something, come back, think about it, analyze it, go back with your thesis, test it again. Yes, that worked. No, that didn't work. And you're constantly refining. So what we have done over the last number of years is really sharpen that picture up. And now that we're drilling and consistently hitting grade, I guess the difference between what we're doing and what you might see in other retail-oriented plays is our drilling is to back up the rest of our data package. The ground and the data package together is what's going to entice the larger mining company to come in. They don't need to see a JORC resource. JORC resource is really something for the retail market. They've got all of the in-house capability to take our raw technical data, analyze it themselves. And so our focus has really been on how do we maximize that data package rather than how quickly can we get to a JORC resource and then how quickly can we scale that JORC resource. That's a chicken and egg situation for us. We can't, until we get the larger institution in and we have their budget assistance to go after this in a more kind of holistic fashion from a JORC resource definition perspective, we're not going to spend the money in the same way on the drilling. We're going after very selective drilling, very selective sites to show continuity of mineralization, the extent of that system over those many kilometers, and these multiple zones coming through. And that picture is now starting to emerge very, very concisely for us. So it has taken some time. There's certainly plenty more to do, but we're now at a phase where we're confident we can step up to that next level and justify spending that the bigger budget on infill drilling, resource definition, delineation.
So you've given us a couple of sort of hinters a couple of times there, and that is that what you're not looking to do is what some of these retail stocks do, which is constantly come back, ask for money, drill a bit more, hope you get some good grades and spin it the plate that way, should we say. You're clearly looking to spin the plate with the majors. You sort of already said that you've been in the field with a major. I mean, how many majors can you talk with? Is it a sort of competitive game? You've delayed also the exercise some warrants back sort of 6 months so that you've got more time. Is that the sort of time length we should be looking at? And I suppose the final question, I'm throwing a load of questions all at you one go, is, how you're about a £13 million sterling market cap at the moment. I mean, could this go to? I know it's difficult. I mean, there's suggestions out there of, I think the last piece of research from Lyme at 6.6p. We've talked about 5p. You're currently 1.3. I mean, is this the right sort of area? You can't obviously talk prices, but I'm trying to give a flavour for anybody listening to this of why they should buy the stock now because of an end result coming up perhaps in 6 to 9 months' time. Maybe you could just talk through that whole sort of situation, and therefore obviously a liquidity event as well.
Yeah. Okay. So yes, absolutely. Our focus is on how do we get a multiple times return on the value of where we are now. So we need to take that lead asset into a sensible transaction. On the back of that, we're going to get value for the rest of the portfolio. So remember, we have quite a large portfolio behind the Specimen Hill asset, and we certainly have an ability to go in and pick up more ground that our technology has identified as prospective, but we don't want to incur the holding cost until we show we can start to cycle these assets. So as a business model, that's what we're looking to do. How rapidly can we scale? Well, we typically see in the Australian market, if you get the likes of a Newcrest coming in or an Evolution and backing a company at an early stage, it can very quickly go 3-5 plus times. So yes, you can generate those kinds of returns for the investors at this stage, and that's certainly what makes it appealing and why there's such a lively market on the Australian Stock Exchange in mining stocks, not just in gold, but in exploration stocks across the spectrum at our phase, where we've got some hard science showing that we're onto something, and then the question is, how big can it be? So we've de-risked substantially what we're doing as far as we can with the budget we've had, and now there's potentially a lot of blue sky ahead of us, and we need to start crystallizing that with a transaction time frame from us. We are talking to multiple parties. We're pretty transparent in that we'll talk to anybody who'll talk to us. As I've said before, COVID has benefited us in the sense that when people were locked in Queensland, they couldn't go anywhere else. We were waving our hands and say, well, come on site, have a look at what we're doing. We think it's pretty interesting. This is how we're getting there. And we're looking for a partner to take it to the next phase. So we've had some positive response from that. And typically the majors in the region here, both Australian and foreign operators operating in the Queensland space, the technical teams are very inquisitive. Geologists love to talk to geologists about what they found. So we found it pretty easy to get that technical engagement. What we're now doing is turning that into the corporate and commercial engagement. So that does take some time. We've had parties that have been out to site with us multiple times, conducting diligence. We're in the phase now where we're producing reporting from our drilling. We're having that externally validated and kind of stress tested. And that's an important part, that when we go and pitch something to a large and sophisticated organization, it's not just us saying it. We've actually got an independent expert to say, yeah, we've had a look at what these guys are on, and this is worth spending your time on. That gets us that kind of next meeting and gets us that credibility. That process is happening. In addition, we need to add some analytics to that. There's a chronic shortage of availability of all sorts of things in the exploration game right now. It's not just shortage of space at the labs to get your assays done. We want to get some digital imagery done. It's quite a sophisticated piece of digital imagery that we need to have to kind of add into our reporting to help us show and tell as we go out and do that roadshow with the potential investors. And so we need to get access to these skills to wrap up that reporting package. But in the interim, we are still in negotiations with multiple parties, or in discussions with multiple parties, trying to get them into a negotiation.
And what would you expect the outcome to be? I mean, is it a farming so that the asset continues to grow, but you don't have to put the money in, or is it a takeout? Is it not necessarily the company, but of the whole asset? I mean, how would you expect, without saying that you shouldn't, of the sort of what sort of liquidity events are we looking at to realise the value?
What does success look like on a negotiation? we're not emotionally attached to any of these assets, but we would like to participate in the upside on an ongoing basis. So ideally what we do is farm in with, say, an initial $2 million commitment that would over a 12-month period, and that would enable us to rapidly advance Specimen Hill to the next phase. Then with an option for another investment to take the farm-in partner up to, say, a 50-50 or 51% majority position. And then beyond that, an ability to take the asset out, but ideally to leave us with a royalty. So we have some ongoing beneficial interest in it. But really the success for us is to generate sufficient out of a sale of the first asset, or majority divestment of the first asset, so that we're fully funded to go and do the second one ourselves and not have to rely on a bigger brother coming into that. How do we monetize that? We sell it to the bigger brother, but instead of the $2 million entry price, maybe we're at a $20 or $50 million entry price on that one. So in terms of overall liquidity, ideally a couple of $1 million into the asset over the next 6-12 months, and then look to step that up very quickly into a much larger resource delineation program.
I mean, for a big major, that's does nothing. They can sprinkle that all over the shop. Is that what we're seeing at the moment in Australia? They are sprinkling a little bit of here and there to try and acquire us, because they are desperate to acquire assets, these big players, aren't they?
Absolutely, and the desperation comes from two different pressure points. At the top end of the market, we're seeing the very cashed up gold producers are starting to buy out the mid-tier, well, merge with peers and buy out the mid-tier range. So they're looking to replace the ounces they've been mining. And then at the junior end of the market, the ASX has had a record year for capital raising, largest ever year on record, raising capital for exploration, not only in gold, across all commodities. Obviously lithium and other battery related metals are hot quite right at the moment. But what that has meant is that the assets that may have been looking for a larger partner are now funded independently. So there's actually quite a shortage of high quality, well-developed assets that are available for a farm in. So we're hoping to take advantage of that kind of cyclical shortage at the moment.
I mean, just finishing perhaps up on the Queensland situation. I mean, as you say, it's been amazing what's happened on the ASX this year. Huge amount of money raised, huge amount of success as well. I mean, presumably somebody may actually, just a mid-tier company, come in and just say, you know what, I'll put this into my portfolio. Are you getting any sort of sniffs of that around, again, without saying anything you shouldn't? Because you are a valuable asset.
Well, the conversations certainly, that as much as the geologists love to talk with each other, the project sponsors love to talk with each other as well. So we are talking with other parties up in Queensland. We're not having merger discussions all the time. We're just, how are you doing? Where are you raising your capital from? Where are you seeing support in the market from? Those sort of discussions are ongoing. So we're pretty close to a few players in Queensland and more broadly in gold across Australia. I will say that the WA groups they tend to stick with WA assets. It's a different type of geology, so they kind of happier in that space. And Queensland, we're happier in, or East Coast Queensland and Victoria. Obviously, Victoria's had a huge resurgence as a gold centre. So we are seeing a lot of activity, and we're having a lot of discussions with people that are active. We think it's a good time to be getting into corporate deals now.
There is certainly a lot of M&A taking place globally in your space. Let's just spend the last few minutes talking about one or two of your other assets, because of course you do actually have other assets and interests which you just to a certain extent keep on the back burner at the moment until you've finished your main asset. But do you want to just talk us through those, Brett?
Sure. Well, after again COVID created a bit of a delay in South Africa, our operation on the South African government-owned diamond mine, which we divested a majority interest of that to Kazera. They've got that up and running. They've got diamonds coming out now. They did a very smart deal with the government diamond mining company to actually take over the operation of the diamond recovery plant, and they've put some refurbishment into that, and they've got that running and getting recovery rates up quite significantly. So we're looking for that to start generating a good amount of cash next year. They're already sort of cash flow positive on that now, I believe, and that should be a good little earner going forward. The second piece, at the same time as we went into our diamond exploration there a couple of years ago, we did some work on the heavy mineral sands, and we've had a mining license application in there for a while now. We've had indications that should be coming through. Kazera have even announced that they expect that to be coming through shortly. What we've done is, again, we've sold out a majority interest there. They've had that independently valued at about 150 million pounds. And so when that mining license comes through, that's going to be quite a significant asset. We've got a non-diluting 10% interest. But in addition to that, we are currently holding the Black Economic Empowerment component. So in South Africa, you need to bring in your BEE partners. And that's another 30%, which we sell down. It's not a giveaway. We sell that down. So when that comes through, we're going to capture that value as well. That will be paid down over time. As the asset comes into production, the BE partners will then pay off their loan to us for the equity that they're getting in this transaction. So that's actually quite a meaningful sort of value for us. It's our 10% plus the 30% BE components, 40% of 150 million pound asset. So that's been a very good trade for us. We spent quite a bit of time in South Africa getting that right, and then we're very happy to trade that out to Kazera, who had the asset in Namibia, just over the Orange River, literally to the north of where we are, within 100 kilometers. So that little package is coming along nicely, and of course we're looking at all sorts of things all the time. We see a lot of deal flow as a business, so we are looking around at other things, but our focus really from an operational perspective now is moving that Specimen Hill asset forward.
Well, look, I think we can probably wrap it up. I think that's a really good sort of summary of the state of where you are. And again, I think what is coming across quite clearly is your objective here is not to run a business for 20 years, but is to create shareholder value. And you'll look at deals. Fingers crossed is all I can say. 2022, let's hope a nice deal comes along, because then I think everybody will make an awful lot of money.
Absolutely.
Any final word you'd want to say, Brett, to your shareholders, your potential new shareholders?
Well, we certainly have been very fortunate in the support from the shareholders, and enabling us to get back into the field and do that additional drilling, which has now given us this runway to go and have these corporate discussions. We're hoping to wrestle a deal out of over the next 3 to 6 months. And so thank you to all of those supporters, and to new shareholders or potential shareholders looking at us. Say this is an ideal time to put some risk money to work into gold, and into potential corporate activity, and certainly into what we're doing in the mineral sands, which we think is going to be a pretty exciting project in the next year.
Very good. Brett, I wish you a very Merry Christmas, Happy Christmas, and let's fingers crossed 2022 could be a very exciting year.
Absolutely. Thanks so much, Andrew.